So tax season is almost over. Some of you might be regretting not getting the refund that you expected. Some of you wish you might have done some things differently in order to get a better refund, save some taxes, keep more of your money. So in this video, I want to talk about my favorite ways of avoiding taxes. So the first way, of course, is the RRSP, the Registered Retirement Savings Plan. Contributing to your RRSP allows you to get a tax credit in the same year. So for example, if you make $100K salary, you contribute $10,000 to your RRSP, you can basically get a refund of about $4,500. So really, it depends on your tax bracket. It depends what your income is, but you'll get at least between 30% and 55% as a tax credit when you contribute to your RRSP. So that $10,000 that you're contributing to your RRSP is basically money in a savings account or whichever investment tool you put it in. But it's money destined for your retirement. So you're basically not supposed to touch it. It's still your money though, but putting it in that savings account or in that savings plan allows you to get a tax credit that year that you make the contribution. And then in the future, when you do withdraw your money from that RRSP account, you'll pay taxes on it. But assuming that you'll be in a different tax bracket in the future, you're gonna be paying less taxes than what you saved when you contributed in the first place. And even if you do end up paying the same amount of taxes, if you saved $4,000 today and you end up paying $4,000 in the future, you're better off because $4,000 today is worth more than $4,000 in the future. So the first way to avoid taxes is really to contribute to your RRSP if you're in a relatively high tax bracket. Especially that it's your money, it's not going anywhere, it just stays in an account that you can't really use right now, you could use in the future, or you could use it in a year where you have low income. So for example, if something happens and there's a year where you're taking the whole year off not working, well, you can basically withdraw that money from your RRSP account tax-free, depending on how much you withdraw, of course. So definitely RRSP is my favorite and the simplest way to avoid taxes. Second, I would say working from home, finding a job that allows you to work from home so you can claim some home office expenses. So when you work from home, even if you're employed, you can deduct a portion of your home expenses towards that employment income. So what's great about that is that you're including expenses that you were gonna pay anyways, regardless of where you were working. You're paying for those home expenses. So isn't it great to include a portion of those home expenses and use it to reduce your employment income? So based on the square footage of the office space that you dedicate for work, let's say 10% or 15% of your home is used for work, or let's say your office space represents 10% or 15% of the square footage of your total home, well then you can deduct 10 to 15% of your interest expense on your mortgage. You can deduct utilities, internet, phone. You can deduct some depreciation. If you have a laptop, if you're working off a computer that's yours. If sometimes you have to travel for work, you can deduct expenses on your car. So you can deduct a bunch of expenses when you work from home. So if you can find a job that allows you to work from home, that would be a great way to help you avoid paying some taxes because you're deducting expenses that you were paying for anyways and reducing your employment income. Another great way, in my opinion, is starting an online business. So any business, the point of any business is to make money. So eventually you're going to be profitable. But at the beginning of any business, you're probably going to have more expenses than revenues. When you start an online business, once again, you can deduct a bunch of expenses, obviously related to your home, like internet, or if you're dedicating a space of your home towards the online business, you can deduct that. So once again, it's expenses that you're paying for anyways, but you get to deduct it from your income. That business is probably not going to have income the first year or the first couple of years, so your expenses for the first couple of years is going to be higher than your income, generating a negative business income and deducting your other sources of income like your employment income. Examples of online businesses would be a YouTube channel, a Shopify store, dropshipping online or buying and selling on Amazon or eBay, a personal blog. So having an online business at the beginning is going to allow you to deduct a bunch of expenses like your equipment or your laptop, or for example, if you're definitely an online business, your major expense will be internet, so you could deduct that. If you have a travel blog, you can definitely deduct some flight and hotels and accommodation if your main purpose for travel was for business, was to create content for your business. Another great way to avoid taxes is to invest in real estate, because although you're increasing your income by renting out property, that income that you're actually getting can actually be completely wiped out with real estate expenses like mortgage interest, property maintenance, property taxes, and property depreciation. Now, with property depreciation, you cannot create a negative income from that. So it's not gonna bring your total rental income to negative. The most you could do is bring it down to zero. So you basically made rental income without having to pay taxes on it. So it's not necessarily reducing your current taxes, but it's allowing you to make an income that you don't have to pay taxes on. Now, the only risk with that is when you depreciate a property, if you sell that property in the future, you will pay taxes on the amount that you depreciated. So as long as you plan on never selling your property, depreciation on real estate is a great way to avoid taxes, because you'll always wipe out your rental income, so you don't pay any taxes on that extra income you're making, and you're creating wealth at the same time because you're having your tenant pay down your mortgage, so creating equity, increasing your equity, which you can withdraw by refinancing or getting a home equity line of credit and use to invest in something else, another property or on the stock market. So yeah, these are my 4 favorite ways to avoid taxes. Contributing to your RRSP first, find a job that allows you to work from home, start an online business, and invest in real estate. So although the tax deadline is approaching April 30th, it's still not too late to prepare your taxes. In fact, you still have to prepare your taxes. And the deadline really concerns those who expect to pay a balance, to owe money to the government. But if you're expecting a refund, really there is no deadline. But obviously the sooner you do it, the better for you. If you're expecting to get money, why leave it out there? But for those who expect to pay something, they should then the deadline concerns them. And like always, if you're looking for an accountant to do your taxes, feel free to message me. Link will be provided below. Thanks for watching.